Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, April 6th. Mike Boutros with you on the horn. Great to be with you guys this morning. Hey, Eman, Jay, Pete, Tiffany, great to see you guys. So, kicking off the first couple of days of April trade, we're seeing some weakness in the dollar. I do think there's a little bit, or the risk of a little bit more of a setback, but we're broadly looking for some support for the greenback in the days ahead. So on the menu, we'll go over DXY, Euro, Kiwi dollar, Sterling, dollar CAD at resistance, dollar yen pulling back into former resistance, gold at resistance, dollar Swiss, and a quick look at Aussie, which is still holding those key range lows. Any other questions or trade setups, guys, as always, feel free to throw them on the message board at any time. Okay, let's jump right in. So here's where DXY looked last night. Let me just take you to the weekly chart real quick. So nothing should be surprising. All of the trades that we're following, all of the major levels, the broader trends are just reacting to trend extremes. So here's the DXY. Here's the breakout that we highlighted and documented well into the beginning of March. We sat below that key resistance confluence right there at the 2018 open, 100% extension, right above 92. Once that popped, the last level, okay, or the first level, I should say, was this confluence zone right here, just above 93. If we breach this, which is the 2011 trend line, major inflection, then you're looking for a resumptive trade to the long side. You look at 93.88 and bigger resistance into 94.65. All things held constant, right now, you're at confluence resistance. You're at confluence uptrend resistance. You're at confluence downtrend resistance. So no surprise to see a little bit of an interruption here in the dollar breakout into the open of April. Now, the bigger question is, well, how deep does the pullback get? Are we looking for this to be terminal and we're looking for the resumption of the broader downtrend, or is this just corrective? That, my friends, is what we're trying to determine as we step into April trade here. Now, again, gunshot to my head, ideal scenario, the pullback really, I don't even want it to get this low, but really the max that you get is 92, and then we're off again. So maybe a little more room for some downside draft in the dollar, but broadly looking for that to bottom out pretty close. Now that's the weekly chart, right, from 1,000 feet up. Here's what it looks like on the daily. On the daily chart, near-term support right around 92.46, just lower is going to be the median line for the current operative pitchfork we've been following since the start of the year, or the yearly lows, I should say. And that coincides pretty darn well with the March opening range highs and the lows that we made back in October, for that matter. So maybe a little lower, looking for some support here. Not much dollar event risk on tap. I mean, tomorrow you do get the release of the FOMC minutes, but not expecting much on that one. Again, we get the presser, we get all the questions and all that stuff out. So minutes are having lower and lower impact moving forward. But that's the risk from a technical standpoint. So maybe a little bit of draft lower. Resistance, monthly open resistance at 93.21. Major key resistance in the breakout zone is still right at that 93.40, 93.55 level. Nothing's changed there. All right, intraday looks even more interesting. Here's what it looks like. So if we are just to simply measure the corrective move off the high, 2 equal legs gives you 92.50. We just talked about the 236 at 92.46. It's right there, just below where we are. And again, just below that is that slope. So basically like this zone, sometimes this does this. Let me just grab that. So this zone right here, right? Maybe a little bit deeper into 92.40 or so. But that's where I'm looking for inflection. If it breaks, or if we make a weekly opening range here, and then it breaks like tomorrow, even worse on Thursday, expect an accelerated drop. Okay, that'd be the onset of like sort of a corrective move. But all focus right now is on this zone today in New York trade. So we'll be tracking this one to the close of the week. Quick side note, guys, I'm actually off after today until next week. So I'll catch you guys back in the live sessions on Monday on the free session, Daily Effects, and right back here on Tuesday and Thursday. So we're back to normal schedule starting next week. I'll update you throughout, you know, on Thursday or Friday if we see anything of merit. But I will be out. It's my daughter's spring break, so doing a little get together there. Any questions on DXY? Again, weekly open resistance at 93, right? That's where we opened the week. Key resistance still into that 93.40, 93.55 resistance barrier. Any questions on the dollar? So where does that leave euro? And here's what the dollar, by the way, looked like last night, right? So no change. The 100 extension, I added that this morning just as a little tidbit there to open up the zone a little bit, but you're basically looking at this support zone. Nothing's changed since the start of the week. Also yesterday, we covered the euro. And this is an interesting one because the breakout as of last night had completed 2 equal legs off the low. That's exactly 118.20. We're still holding that high. You know, we're still right there. Whoops. Here's a 2-hour chart. And here's what it looked like last night. So again, this slope derived off of just the basic slope off the lows here. So you can see 100 is here, just higher is the larger pivot zone that we were talking about. Let me take you back real quick, top-down approach. Here's euro on the weekly charts. This was a big support zone. Now, truth be told, we turned just ahead. The low registered at 1704. We were looking for a drive into 1695, okay, 10 pips off. Here's the recovery. So no, again, it shouldn't be any surprise that we're seeing exhaustion here. The breadth of the recovery, that's what we're gauging right now. The high week reversal close from August of last year gives you 1835, just the level I'm looking for to see how this closes on a weekly close basis. Euro on the daily chart does look like it's got a little bit more room to go on the upside before you start to run into anything major. Again, 1845. I'll show the intraday chart in a moment, opens that up a little bit, but you got the lows for the opening range of March. You got 100 off the high, and certainly you got a really nice inflection with the break accelerating lower. So a little bit higher in euro, kind of jives well with what we're looking at on the DXY, right? Again, here's the intraday, 1835, 1845, and then just above that, I marked, I think, 1870s on the report last night is this confluence zone. So this coincides a little bit better with some of those lows that we saw last month. The current operative upslope, longer term on the daily chart, it's this upslope, 25% parallel. So maybe a little higher, but broadly looking for an exhaustive pump here on a push. Questions for euro? No surprise that we're seeing, guys, these kinds of moves early in the month. Again, we're just opening up the quarter. It's only been a few days in April. Let the noise clear out. But I think this is going to offer a decent reset eventually. All right, that's 1 and 2, euro and DXY. Number 3 from last night was Kiwi. So for Kiwi dollar, it's like, you know, the level that we turned from was a beautiful support structure. And last night I was telling you guys, it's 2 levels. It's either right here where we were at 70.66, or more a little bit higher near 70.90. That's where we're looking for exhaustion. Is this it? Well, it's not an outside reversal, which would have been pretty convincing because we didn't actually max yesterday's high. And I don't think we're necessarily out of the woods yet. The weekly opening range remains intact with this last rebound here. At the end of the day, it's the same setup. Nothing's changed. It's either exhaustion. This is the 4 hour, so I guess let me put things here just to keep it a little more consistent. So we turned right lower from this. At the end of the day, these are still 2 levels, both of which we're looking for exhaustion. For me, this is a new slope I added this morning. So here's what it looked like last night. Right? We just rallied up and failed. If we add just a near-term slope off the low, I'll zoom this in again, it basically would suggest that we would need to break this to mark the resumptive move. If you add a retracement off the low, that level turns out to be the 618. Whoop. The 618 retracement at 69.90. And that's what we would need to break to sort of validate the resumptive move. So remember where Kiwi's coming from. Again, I'm going backwards today, guys. Sorry about this. Weekly chart on Kiwi looks like this, right? So we came off of a big support zone that was 69.03 into 69.40. It's a 40 pip range. We literally grazed the top of it, okay, with that decline last week, again yesterday. But that was a big break. That was a big break of the yearly opening range. Major pivot on the technical scene, right? Really nice move in the break lower. Even if this thing recovers all the way back into 71, it's still bearish, right? It's still uptrend resistance. It's still lateral pivot. So it's the same trade, okay? Dollar's been rallying. You're taking some back from the dollar. Maybe take a little bit more back, but you're essentially looking for the exhaustion and the drive lower. This is still your key support. This is from the weekly chart, right? So we drive down this into the daily, and it looks a little something like this. Once again, even on the near term, highlighting 70.94, 71.11. Here's your yearly open. Support, 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 break, now resistance. Wait a minute, basic channel resistance off the yearly high is right there as well. So if this is just a near-term bull, bear market rebound, that's really the max we should be looking for exhaustion before the resumptive move lower. Here's what it looks like again on the intraday. So I don't know yet if this slope has much merit, guys, but this would suggest a break below 69.90 puts you right back on path for that move towards 69. Everything in between is noise. Don't have any Kiwi event risk until next week. We do get the RBNZ interest rate decision on the 13th. But outside of that, look for the dollar drive here. Questions on Kiwi? That is number 3. All right, let's get into a little bit more of the juicy stuff here. Here's sterling. False break or what? Someone tell me what's going on with British pound, because this is getting super interesting. Here's sterling on the weekly charts. So nothing to write about, nothing to write home about here per se. Here's what sterling looked like in our last update. We had gone over the full suite of things last week into the open of the month, highlighting this major support zone, okay? 36.75, 37.43, big zone. Don't like to give you big zones, but this is sterling, so I'll allot that. Here's the pullback from major confluence resistance. We've been kind of bobbling off this. So from the weekly standpoint, you're really looking for a close below 36.75 to validate the break and the reversal, or a close above 39.97 to push us back towards the highs. This is the focus range. And in fact, that's the range that held price all through the month of March. Interesting, right? Interesting. Always taking a look back at that weekly chart offers so much clarity. So that's sterling on the weekly. Here's what we look like on the daily chart. And this is just, for me, I chalk this up to classic sterling moves, man. Classic. I tell you guys this all the time. It's a notoriously professionally traded market. Just, you don't take my word for anything. Again, we go back and look at prices. The classic throw over, false break of resistance, classic false breaks of support. Again, is this just a throw over and a reversal? I don't know. For me, I wanted to see failure at 38.88. There's a couple of reasons I wanted to see that. I'll show you the intraday in a moment. But at the end of the day, bearish inbound was 39.99, 39.95. So that was last month's opening range highs. In fact, if you tack on the 50 and the 618, that's also right around that zone. Here's the 50 of that decline. Here's the 618. So I'm torn here. I'm torn here on how this equates to a viable trade setup for us, right? Sorry, I'm getting all confused here. So here, is what the daily chart or the intraday chart looks like. As it stands right now, it hasn't completed an outside day reversal, but it certainly looks poised to do so. Watch today's close. If we close southbound, especially of 38, 38.13, that would not only be a break of the weekly opening range low, but certainly would complete that outside daily reversal off the highs. Don't take my word for it. Here's the last outside daily reversal we made, right off the highs in March. It was on March 12th, and that basically marked the monthly high before we continued lower. So I like to pay attention to these developments. For me, sterling is just setting up a clean weekly opening range right below resistance. Here's what the intraday chart looks like, okay, on the 2-hour, and here's what it looked like earlier last week. So if we take a basic slope support here and we parallel it off the highs, it basically just went into that channel resistance and pulled back. Here's that 38.88, 38.82 region. I was looking for exhaustion off one of these two zones. Here they are. We ripped, broke through, and then collapsed. So I'm willing to start to think a little bit more of the lines of this being a false break scenario. If that is true, I'd want to see failure again in that same zone. And not to get too granular with you guys, but a lot of times for entries, you know, get real granular. Look where the 618 comes in. Right in the underbelly there, 38.80. So that would be my first tell. If sterling, if that was a sort of pump exhaustion, just push through false break scenario, recovery should fail right in this zone again. And again, we'd need to see a break below 37.43, 37.59, this pivot zone, to really mark the resumptive move there in pound. Questions on the British pound? Again, we're clear on data here until next week. GDP numbers come out on the 13th. All right, that is sterling for April 6th. Here is Loonie. So Loonie is at resistance right now. Well, at least it was right into the start of the webinar. It's pulling back a bit. Here's what Loonie looked like this week. And I know we might have just missed entries here on this setup, but what a trade it was. So here's what we looked at into the open of the month. Last week, we made a break of the weekly opening range, kind of pitiful, but it kept the focus lower. And ultimately, the big play was looking for support closer to uptrend support, closer to the upslope, major support confluence here. This is one of my favorite setups to date. Ideally, in Mike Boutros's fanny tale world, with unicorns and fairies and rainbows, you look here. You can tell I have a daughter. Look here. The failure point would be right there still. This is a 618 of the rally off the March low. This is also the 100 of the decline off the high. So 2 equal legs off the high would take you down to 24.75. It's also the low day close for the year. That low day close was an outside day reversal off the lows from fresh yearly lows. All of that converges right here. In case that wasn't enough, the March trend line here on the daily chart, right? March of last year, October of last year, January, February. Looks like it broke through last month, but it's been support. That converges there as well. So the battle lines are drawn for dollar CAD. I'm watching this one like a hawk. I'll probably be watching this one on vacation as well. 24.88 or 24.84 is kind of the key level on the daily chart. On the intraday chart, that whole zone is critical. 24.73 into 24.84, that 10 pip zone of support, for me, would be the ideal move for a major inflection, either a low, or if that breaks, Chirata Mo, 24 and 23.13 on point. It's all for inflection off this. Resistance, ultimately 26 needs to give out for the long side, in which case you're just looking for a tag of last month's high and you're on, off to the races there as well. That's how critical of a range for me this is in dollar CAD. Again, like the ideal scenario is that you fail one more exhaustion into there before you rebound. If this doesn't give you the dump, okay, and we just break through 26, well, then that's it. You're on your way 27.13. That's the objective. 2021 yearly open converges on slope into the close of this week, early next week. So that's kind of my thought process here with dollar CAD. Ultimately, again, face value, you've just set a weekly opening range. You're sitting there. We're unchanged on the week. We literally opened the week right here. So all things held constant, guys, we just rallied into the weekly open. Let me just show you. Here's the weekly open. All things held constant, we just rallied into the weekly open and failed. That's kind of a pivot you're looking for. That's bearish invalidation. Any questions on dollar CAD? Dollar yen, who's dealing with the abomination? Here's what the Japanese yen looks like. So this is where retail gets chopped up. This is where you want to be super careful. I'm very hesitant on, well, let me say this, everyone's getting super bearish. And while we did look for the pullback last week, this is sort of your first area of support. Here's dollar yen on the weekly charts. I think this is, this is the most telling chart and really the most fearful or the most striking threat in my mind to what's going on here. So, man, we talked about this level here at 109 for a while. That essentially held for 3 weeks before the final break into the close of March took us into big resistance, and that level was 109.68, 109.92. We broke and closed above that last week. That's the 50% of the entire 2016 drop. It's the 2019 open. Is that merit in and of itself? Not necessarily, but you could see the severity of every inflection we've made off this zone, including the highs from June of last year. That breakout saw an accelerated run. Here's your first test of that same zone as support. So this is where you want to be super careful on dollar yen. Okay, a lot of people will look at this and will be like, oh, that's an exhaustion high, we should short this, man, this thing's been ripping, it's up like it's up 10% since the start of the year, 6% since the start of the year, this is a great opportunity to fit. Well, hold on one second. If this is a break of uptrend resistance, this is the first test of former resistance as support, and this is where you should be looking for inflection. If this breaks down, I'm with you in that we could be seeing a larger correction, a larger spill lower in dollar yen. That's not the base case scenario, though. The base case scenario is to look for inflection right into this zone. So if this holds support specifically into the bottom end of that zone at 109.68, that still might be another opportunity to stretch higher. Now, what I want you to pay attention to specifically at the end of this week, since I won't have another opportunity to talk to you guys and update you, is watch the weekly close. If the weekly close materializes sub 109.68 and momentum closes sub 70, that's your trigger for a larger correction in dollar yen. If we hold support here and momentum holds above 60 or 70 rather, that's your basic red flag. Whoa, we got more upside to go. So really interested to see how dollar yen materializes specifically over the next 48 hours. Here's what it looks like on the daily chart. Again, confluence resistance, confluence uptrend resistance broke out here. We didn't reach the high day close from March of last year or for the year, which was 112.17. So here's your failure and pullback. Look for inflection, look for reaction right here. Again, anything sub 109.68, I'm kind of sidelined. I think you probably get a larger spill lower. But if this holds, again, top side levels haven't changed, 111.20, 111.60, and essentially 112. Questions on dollar yen? She's tricky here. Be careful. Okay. For all intents and purposes, we take this back to kind of a basic objective outlook. Here's your monthly opening range highs just a bit higher. This is a major key support pivot we're looking for. So that's your range for dollar yen heading into the April open. This certainly threatens the breakdown. So keep an eye on this. Here's what it looks like on the intraday. Not what you typically want to see, right? On a break of confluence uptrend resistance, you typically want to see these accelerate some more, which is why we're on the sidelines and watching this with great caution here. But man, if this fails below this, you're looking for the pullback trade. All things held constant, this is the focus into US trade today. Any questions on dollar yen, so affectionately dubbed the abomination? All right, so that's number 6. Gold. So no change to the dollar yen levels as far as concerned. Yep, no change to any of the dollar yen levels. We've just pulled back. Again, here's your key support. That update is from the 31st. Also on that day, we updated you on gold. And gold is now at major resistance. Major resistance that we highlighted last week on the back of this reversal candle was initial targets 1725, key resistance at 1733, 1736. It's the March high day close and the March open. Here's where we are right now. So all eyes on this. All eyes on this. A breakout above this would essentially open up the door to a possible stretch towards 1767, 1763. Again, I'm going to go backwards here. I'm going to take you back to the weekly charts. Sorry, guys. Here's gold. So the base case scenario that we've been talking about all this time was 1689, 1682. Key support. And ultimately, we would be looking for a way more significant low if we were to drop down to 1650. That complete 2 equal legs off the high. That's uptrend support, confluence uptrend support. And there's a whole lot of stuff there. So this was our first level. Here's resistance. Here's bearish inval, a little bit higher near 1790. Downslope resistance, upslope resistance. That would be where we would need a breach and a close above to essentially mark the resumptive move, right? So the question since the last month has been, are we going to ground out here or here? So far, we haven't gotten that resolve. Now, this move is threatening the first break of downtrend resistance, but even if that breaks, guys, a rally into 1790 would still keep you in the downtrend. So while gold is testing resistance today, it's testing a possible breach of resistance today. If that breaks, yeah, it shifts the near-term focus higher, but that's still all within the confines of the decline on the weekly chart. So keep that in mind. Here's the daily. So you can see the threat that it's making here today, right? We haven't closed above this yet, but if we do push, this is the high day reversal close from March. If we do close and push above this, there's your 1767, 1764. Again, aside from that being a 618 extension, a 50% fib, it's the lows from Feb there before you broke. It's the lows from November there. It's the highs from May. I mean, the works, guys. All right, and here's the intraday chart. Really nice reversal, right into trend resistance. Here's the lateral level. Looking for something here. Looking for something here. If it pops, again, 1745 is just a soft target. That's the March high close. That's the big zone you would looking for your next sort of inflection point. If we fail here, the close below the basic objective weekly opening range lows would objectively give you a near-term downside bias right here, 1721. Look for something here today. Look for something here today. Yeah, I do yes, I see you. I do recognize the divergence, but that's not enough itself enough for me to fight the trade per se. I would need a little bit more of a tell in price, either some sort of near-term reversal or something before I'd start to fight this. Here's the 30-minute. Nothing yet. All right, any questions on gold? This is gonna be pretty big this week as we open up the first full week of April trade. You're gonna see a lot of talk on this. Okay, last two here. Dollar Swiss, I'm not trading it, but I did just want to give a highlight on where the trade has been progressing. So here was our last update on Dollar Swiss as we were testing essentially this 2016 low. I didn't know at the time, but guys, that ended up being the high. We were looking for resistance at 94.43 or 94.97. Okay, so that's a 50 of a multi-year fib, or the 2016 high, which converged on uptrend resistance. It kind of pulled, you know, a sterling type of move here, where you did pump and breach higher, but boy, oh boy, you never closed above it on a daily basis. And not only did you not close above it, you actually posted a big reversal candle right on that attempt. Here's what it looks like on a close. Pretty rock solid, right? Long story short, here's the pullback, okay? And you don't really run into any major key support until you run into the 93 handle. So I do think there's a risk here for a larger turn, or at least in the near term, the immediate threat is still for a larger pullback lower. Kind of goes in stride with the DXY setup, with the euro setup, a little bit more in the dollar, but let's start to clean it up. You had a really profound divergent signal here with price action making a much higher high and the oscillator making a much lower high. One on the inside of 670, one on the outside of 70. So I do think there's a threat of a bigger washout here. On the intraday, I don't really have structure to the decline yet. I was looking for something here to kind of put, you know, some characterization on it. Oop, you can work with something like this, but doesn't really give you much tell. Again, the only thing this highlights is, once again, that 93 level as sort of your first level of support coming in later tomorrow evening. Any questions on dollar Swiss? Threat of a little bit larger of a pullback, but ultimately I would like to see that wrap up pretty soon. It was a big resistance level we turned off of, which was the whole point of the trade. How deep this gets, that's what we're trying to assess here on the intraday. Initial targets right into 93 handle. All right, last but not least, at least on my list, let me know if you guys have any other questions or assets you want to cover. Here's Aussie. So on Aussie's part, remember, this is what we turned over with Kiwi. Here's Aussie. It's a similar scenario, only for Aussie, way more critical, okay? So guys, here's Aussie on the weekly chart. This is the opening range lows for the year. Kiwi broke its opening range lows for the year. And not only did it break its yearly opening range, it ransacked, right? The break saw the accelerated move that you expect to see on a break of the yearly opening range. Here's Aussie. Here's your yearly opening range lows. Here's what it's doing. So similar scenario, maybe a little bit more Aussie updraft, but not much. Break below 75.63 on a closed basis really opens up a larger reversal in Aussie. Remember, more so than some of the other excuse me, crosses, Aussie made a pretty profound outside weekly reversal off the yearly open, which shifted our focus lower. We're looking to see whether the correction cracks the yearly range lows. Here's the daily chart. So it being objective lateral support, here's also the pitchfork. We've been following this pitchfork since last year's lows, right? 1, 2, 3, a modified pitchfork really well. Here's the lower parallel. Again, converging just below last month's low. 75.63. So yeah, into the open of the month, we spilled intraday below, but man, that held. Here's your key resistance. So even if Aussie makes it into 77, it's the similar scenario where that's the zone I'm looking for exhaustion. That's the zone I'm looking for a pivot. That's the zone I'm looking for a bit more of inflection. Here's what it looks like on the intraday. Oops, I don't know why this is not here. There we go. Forget the March open. There's the objective yearly open, 77.01. And let's put this retracement on there as well. Forget this. So 77 to 77.13, that's the sweet spot. That's also last month's open, downtrend resistance, slope resistance. Now, again, it might not even make it that high, but even, ideal scenario, that's our play. That's our play. Now, if this thing breaks the weekly open support, which is right there at the weekly opening range lows, 76, you're still not out of the woods, unfortunately, until we clear and close below 76, 75.60, 75.63. So unfortunately, what that means for us as far as new positioning, you got your hands tied. If you're holding alongs, if you got into anything last week and you're kind of still holding on, I would go break even or better. I'd still be looking for 77, or at least a pump into this zone. New positioning, I don't have anything to do here unless we get into the zone. That's where you look for marking failure or possible exhaustion high. All right, that's everything on my list. Let me know if you guys have any other questions or trade setups you want to review. The dollar is basically in correction, or at least in a near-term pullback, and we're looking to see if that pullback finds any flooring here. Hey, Pete wants to look at SPX and crude. So right off the bat, SPX, I got nothing. Here's SPX, Pete. Man, 40.79. Do you remember? That's the last level we talked about. I mapped this level out, guys, like I think in January was our last sort of stretch target. So beyond here, I don't even have any measured moves, guys. It's all slope. It's all slope. So the daily chart, you're in no man's land. On the intraday chart, if we were to break higher here, like 41.40s, it's a 75% line. 42 would be your upper parallel. I'm not necessarily looking to buy here. With the same respect, there's nothing here, Pete, to mark exhaustion or even tempt, in my humble opinion, the pullback. I would love to see this fail here. I would love to see this fail here for a move right back into 39.71 in Mike Boutros's fairy tale land. But as it stands right now, the evidence just isn't there. Just isn't there. So I think you need a catalyst. I think you need something. So Pete, does that help? I wish I had more conviction for you, man. There's just nothing here for me to wrap my hands around for SPX. A little bit better of a reference in time, but you're pushing the highs. You're pushing the highs, right? And it's interesting to see how this is going to perform because of where SPX is and where gold is and where Bitcoin is, all trading near the highs. So who's playing the risk? Who's playing the risk off? Who's playing the hedge? All the different reasons and all the different rationales that the fundy guys come out for fueling each of one of these trades. That's, it's hogwash, right? Something here's got to give. So I'm cautious. I'm cautious on the SPX. I think you could get a rip higher, sure, but outside of something material, you're chasing. You're chasing. So your other question here, Pete, for crude is this. So let me just show you the crude on the weekly chart first. Here's what I'm looking at. The pullback kind of stalled right at the first lateral resistance level we were looking at in the start of the year on the breakout, and that was right here. Last year's high week reversal close gives you 59.16, and the 618 extension off the low gives you 60.66. So the breakout there went into critical resistance, this huge pivot, 2019 highs, 2020 highs, nailed it, pulled right back, and look at the pivot. Former resistance has been support for the last 4 weeks. Now, my humble opinion, Pete, is I do think eventually this does break lower. Ultimately, I am bullish on crude. The technicals suggest the long side's a little tired, but the fundies, and I can't believe I'm saying this, but from a fundamental standpoint, energy prices for me have been something I think 2021 is going to see a strong tailwind. Whether it's the administration's policy on energy, or whether it's the shutdown of the pipeline, or whether it's OPEC, or whether it's just supply and demand with the reopening, the economic reopening, as it were, just taking place here in the U.S. But Europe still shut down a lot of places, right? All of this reopening is only going to spur more demand. We have less supply here. We're not a net exporter per se anymore. So I do think crude prices, generally speaking, are going to be moving higher, energy in general. That said, Pete, for me, it's just been about 59.16. If we pivot back below this, you look for a larger correction first. Here's the daily chart. So like areas of interest where I would be looking for rebasing would sort of be somewhere in the 55 range if we get down there. Now, again, call this what you may. At the end of the day, if we do break and close back above 61, 61.30, you're back, on the resumptive trade. But till you do, it looks like a 1, 2, 3, 4, 5. I was telling you guys this last month. So 1, 2, even if it pumps into a new high, you'd still risk, in my humble opinion, that washout before resumption. So I think there's a lot chop here, Pete, in the days ahead. I think even if you do max and push higher, you want to be cautious of this being a corrective move, right? Because of the stance that the decline took. So near term, could see a recovery, ultimately below 63.85, let's call it. The risk is for one last low before we start to move off to the races there. Does that make sense? Pete says, thank you. Have a great vacation. Yes, thanks. Hey, you're more than welcome. Thank you, Pete. Appreciate that. I'm more inclined not to be away, to be honest with you, from the markets during this time period, because I think April historically is one of the best months of the market. But family comes first. Poor little Elise needs to have her vacation, so we'll do our part as good parents, and we'll be back. But this is something I'll be watching also very closely into the start of the month and the quarter. So that's crude prices. And here's the intraday. I was kind of messing and diddling with this last week, but I couldn't really find anything worth of merit. So we'll be tracking this one. Any other questions, guys? If not, we'll go ahead and wrap it up there. Keep your eyes on dollar CAD. Keep your eyes on the commodity block in general. Aussie and Kiwi have all been something I've been watching very closely, especially as we get deeper into this week. As far as event risk is concerned, watch CAD employment numbers. Those do come out on Friday. We're expecting to see a pretty strong read, but much less than the previous month. So we got 259,000 last month. We're expecting 100,000 this month, but unemployment is expected to downtick to 8% from 8.2. So either way, may get a kick there for the loony cross as you get into the close of the week. If there are no other questions, I'll go ahead and wrap it up there. Guys, have a great week. Again, keep in mind, we're still opening up the first full week of the quarter and month, so stay nimble. Ultimately, I think we get a lot more of a kick in volatility this month, and I'm looking forward to it. Jay says, thanks. Have a great time with your family. Thanks, Jay, Pete, Iman, Agnes, Tiffany, Steve. Thanks, guys, for all the support. Best of luck trading this week, and I will see you next week on Monday. Cheers.